Welcome to Real Estate of Mind, a Farming Group podcast. Welcome to another edition of Real Estate of Mind. This is Andy Gutman from the lovely Essex Center Studios. I'm here today with Terry Pryor, who is the Senior Vice President for Huntington Bank in their commercial real estate banking division. Terry, that's a long title. I hope I got it right. Welcome to the show.
Thanks, Andy. Thanks for having me.
So, Terry, I know that you've been in banking for a long time. Just going to be frank with you, you're obviously a legend in the industry. Everybody knows who you are. But I think for the handful of people that might not know you, love to hear a little bit about your background. Tell us how you got started in banking and the trajectory that got you where you are today. And all kidding aside, you really have truly a great reputation as being someone who is really talented at what you do. So I'm going to quit complimenting you and let you jump in and tell us a little bit about yourself.
Well, thanks, Andy. Appreciate that. Very kind of you, as always. Born and raised in Detroit, product of Detroit Public Schools in Wayne State. Started with a small bank called Security Bank and Trust out of college.
Nice.
Now over 28 years ago, with one of your colleagues and my good friends, Mike Khalil.
Mike Khalil, COO of the Farming Group.
Yes,
also
right.
A legend in the industry, for sure.
For sure. Yeah. So he and I started there about the same time. Spent a couple years in their commercial analyst program, working as a commercial analyst, and then I was promoted to a lender. Spent a few years as a lender with Security Bank. We were bought out by First of America. I left about a year later, spent a short time with a bank called Sterling Bank before spending 14 years at TCF.
Wow.
So I was TCF about 6 years as a lender, and then headed up the real estate group here in Michigan for TCF for 7 years, and then spent 1 year heading up all of commercial banking for TCF in Michigan before the Great Recession hit.
Yes.
And TCF and I kind of parted ways, and ended up with Huntington Bank starting in 2009, and I joined there to head up their workout group for commercial real estate. Great guy by the name of Tony Montalbano was there, and he
Yet another legend.
Yes. And Tony was heading up their REO group, and when I sent him my resume, he said they needed somebody to head up their workout group here in Michigan for real estate. And I said to Tony, really? I don't really want to do workouts, but that's where the need was. I said, could you get me, Carol Brum was heading the group at the time for commercial real estate banking for Huntington Bank. And,
wonderful lady.
Yes, and Tony said, well, I can't get you that, but you never know what might happen. So I, even though I'd never really done workouts before, started with Huntington, headed up the group, worked out of a large portfolio of investment real estate over about 3 years, and lo and behold, Carol Brum decided to move on to another opportunity for her, and the position came open, and so I was able to jump into the spot, and I've been heading up the group now for Huntington Bank for the last 4+ years.
That's fantastic.
It's been great.
Yeah, it's a great organization, and you mentioned that during the what we call the Great Recession, and I think years from now we'll look back on as a depression.
Yes.
It's amazing how many people who were in lending suddenly were in workouts and trying to shore up the challenges that everyone's portfolio faced during the downturn. But I think before that, from a borrower's perspective and from a lender's perspective, workouts wasn't really a thought. that you ever had. You were a lender. You lent money, and that's what it was. But it was some tough years. So
yeah, it was tough, and definitely I think even though people might not have technically been in the workout group, everybody was doing workouts to some extent.
Yeah, on all fronts from from a borrower's perspective as well.
Yeah, it was a great learning experience. I wouldn't trade it for anything, and I really valued that experience I had.
Yeah, I can imagine. It's one of the things I tell our millennials that came up in the Great Recession. You just got a PhD in commercial real estate because there's no better time to learn than during a downturn.
Right.
It's not what you ever want. Those aren't lessons you necessarily want to learn, but it really sets the principles for future lending and future borrowing.
Yeah, definitely.
So you made it through. You're now running. How big is? I know there's different ways of measuring, but your portfolio or your area. How do you measure that?
Well, I've got 8 people on my team, 4 relationship managers and 4 portfolio managers, and we've got. Can't really discuss numbers, but we've got a sizable portfolio here in Michigan, and continues to grow, and commitments continue to grow, and it's doing well.
That's great to hear. So Terry, tell me a little bit about Huntington Bank, the history of it, where it's headed, why you love being a part of it.
Sure. So Huntington, we just celebrated our 150th year anniversary last year.
Congrats.
Thanks.
That's huge.
Yeah, it is. I mean, I think we're one of the oldest banks under the same name for 150 years. So
that's pretty incredible.
Definitely an accomplishment, I would say.
Yeah.
So we're currently located in 8 states. We recently acquired First Merit Bank.
Congratulations on that.
Yeah, thank you. So that increased our size by a good 25-30%. So we're now a $100 billion bank.
That's fantastic.
Yeah, in 8 states, and we have been really growing here in Michigan, investing heavily in Michigan, expanding our branch network. We now have the largest branch network in Michigan, and a lot of that I attribute to Steve Steinauer, who Steve is our CEO, and when he was interviewing with the board of directors for the position of CEO with the bank back in 2008, he told the board that he thought Michigan was our biggest opportunity, and as you can imagine at that time, things were not good. Cover Time magazine, GM filing bankruptcy.
Right.
Things were pretty bleak here in Michigan, and as you can imagine, the board wasn't too sure about Steve at that time. But once they heard why he believed it was the biggest opportunity, they really thought he was onto something, and subsequently ended up hiring him, not just for that reason, but obviously others as well. And he came on board, quickly sought to raise capital to help shore up the bank's balance sheet, and went out to market and was able to get a lot of investment groups to invest into the bank. And then he subsequently told them of his plan to invest in Michigan, and they were a little surprised, to say the least, at that.
But, in 2008, understandable.
Yeah,
understandable.
Definitely. But the strategy has worked. We've been growing by leaps and bounds in Michigan. We now have the largest branch network in Michigan, like I mentioned, and continue to look forward to our relationship and our place in Michigan, our growth in Michigan, and we're doing well.
That's great to hear. And you can certainly see where the rest of the country might have thought the plan in 2008, the height of the downturn, times were not good in Michigan.
Yeah.
They would question that. But those of us like you, you're born and raised in the city of Detroit.
Yeah.
You know the capabilities of not only the city but the state.
Mm-hmm.
That we can never be counted out in Michigan.
Right.
And that's it's quite a contrarian approach that he took.
Yeah.
but clearly has paid off, and probably the doubters no longer doubt anything he says. If he says to invest on the moon, I would imagine they're thinking he's got to know something, right?
Right.
It's a great strategy, and it's great to see the growth. And the thing that I thought was really helpful during the downturn, it was an interesting approach that Huntington took, maybe different than some. It was a relationship-based approach. Everyone was feeling the effects of the downturn. Mm-hmm. And there were some that took a scorched earth approach. If you were in pain, they just tore the Band-Aid off. But Huntington took an approach that said, let's find a solution that works for everybody.
Yeah.
And I think that's what's kept the relationship strong now that borrowers are borrowing again.
Yeah.
They remember the relationship-based approach.
Yeah.
And it's spoken well for your organization. I think that's a lot of it, having a Terry Pryor who transitioned from workouts in a humane handling of workouts whenever possible.
Yes, right.
It's always whenever possible.
Yeah.
But you think with a good borrower who's doing the right things, as a lender, you're appreciative of that.
Yeah.
But then to make that switch with those same people, the same borrowing groups, adding more on because of the approach you took, I think that goes a long way and says a lot about you and the bank.
Yeah, I would agree. I think that the bank's direction was at that time that if the borrower had good intentions, we were to work with them, and I think that made sense in a lot of ways. And, it really worked out better for everybody. In the end, it was like a win-win situation.
Yeah, I would tend to agree with that.
Yeah.
Terry, we're into March as of today. It's so 2 months down, but a lot of 2017 left. I know you've got your outlook on 2017 that you want to share with everyone, and I know our listeners are thinking, good God, what's happening in commercial real estate banking in 17? What can we look forward to? So now we've got the prognosticator, Terry Pryor. Tell us what 2017 looks like.
So I think kind of business as usual. I mean, we're not agreeably concerned at all in terms of commercial real estate. I mean, some people I think are concerned about what inning, so to speak, that we're in at this point. Are we late in the cycle? But I think we still feel like there's a couple innings left in the cycle, and really with us too, Andy. I think it's really about the relationships, and we first start with the sponsor, and is the sponsor a top tier property owner, operator in our footprint, and so if that's the case, then can we develop a full relationship with them? Can we bring our expertise and services to the table and have a full relationship? And our goal is really to be there through the cycles. So when things do turn down, which we know is going to happen,
always does at some point.
It's natural that we'll continue to be there for our strong commercial real estate customers through that cycle. So
that's good. All right.
Yeah, I mean, so we're doing all kinds of loan types currently still. I mean, construction loans, bridge loans, perm loans. I mean, we'll go as long as 10-year on perm debt. Product types, pretty much all product types. I mean, we are getting a little bit more cautious, I would say, on multifamily and hotels, just given the amount of new construction, that we've seen the last several years here. But even so, it's still about who's the sponsor behind the project and the market. Michigan, in particular, hasn't seen the amount of new multifamily construction that some of the other markets that we're in has seen. So we're not definitely not nearly as concerned in Michigan, I would say. So we're active
That's good.
doing those projects.
And you're right, you don't see the overdevelopment like you do in some of the primary markets like Chicago, where it seems like every day there's a new hotel or a new apartment or a conversion of of a building that into one of those two product types. So
Yeah.
Michigan still, I think it's been well balanced, positioning us well for any downturn, I believe.
Yeah.
But it's nice to hear you landing on all those product types. And if I heard you correctly, it sounds like we're in about the 6th inning, according to you. We got some game left in us.
Yeah.
Another third.
6, 7.
6, 7,
depending.
okay.
I mean, it does seem like we've gotten some recent optimism and lift with the new administration and the hope that he's going to reduce compliance and help drive some additional business. So that's good.
Yeah, I do think it's interesting because everyone has and I don't want to get political in this because you and I can't afford to be political ever, but it's interesting because our president comes from commercial real estate. There's a thought that seems to permeate our industry that it'll be beneficial to us because of that historical understanding of our industry versus many others. I mean, that is one that's the background of our president. And anything else aside, all political affiliations and whatever, I think we all feel like there's an understanding of the need to monitor regulation a little differently, a little better. So I think there's hopefulness that may differ from other areas or other affiliations, and with that we're gonna move way past the idea of talking about anything presidential for many years. So All right, Terry, thank you so much for being a part of this today. We loved having you on Real Estate of Mind. I know that our listeners are going to all be calling into us, reaching out and saying, loved hearing Terry Pryor on your show. How do we get a hold of him? If we want to take out loans with Huntington Bank, how do we get a hold of Terry Pryor?
You can either reach me by my phone, 248-244-3620, or my email is Terry, Terry.Pryor, Pryor, @huntington.com.
All right, thanks. I would imagine as soon as this hits, the phone's going to be ringing off the hook even more than usual.
Well, thank you.
And
Thanks.
again,
I appreciate you having me.
Well, I said it at the beginning, I'm going to say it at the end. I've worked with you for many years now, and I feel very fortunate to do that because you truly are a class act in the game of banking and financing, and your reputation. And that's going to come as no surprise that I say that. Everyone listening will say, yeah, that's the Terry Pryor we know, we love. So I'm going to close it out with that for Farbman Group and Real Estate of Mind. This has been Andy Gutman and
Terry Pryor.
Join us next time for another wonderful edition of Real Estate of Mind, a Farbman Group podcast.